Just got to start over. There it goes.
Welcome to Market Talk, the video segment. I'm Susan Littlefield. Bryan Doherty is joining us today with Total Farm Marketing, an interesting marketing trade. I don't else know how to sum it up. This is one of those days where you look at the screen, you walk away, and you come back up, and you're kind of going, "Wait a second, didn't we just have green and now we have red?" The definite volatility that has been in the livestock trade today, with a lot of dumped on it after the markets closed yesterday. That, of course, includes the new world screwworm and the border closing. Add to it that 50% tariff added to Brazil. So let's just break it down. Really, a whole lot of volatility. But Bryan, you're telling me there's a lot of opportunity that's working in there as well.
Yeah, so the thing to pay attention to is you've got this big long-term uptrending market, and it looked like the market may have found its peak in early June there, and the idea that we're kind of getting those purchases for July 4th, the summer grilling season, and we dropped the market back, find good support, the 50-day moving average, nice correction, and that just rocket higher here over the last several days. That rocket higher really provides opportunity. Today, a big strong upturn gave way to front months declining. Not huge losses, but losses, and nonetheless a very large range compared to the previous day. In particular, as an example, the October live cattle jumped up to the 220 area, high of 220.62. So it was a and they finished lower. So it's a big bearish key reversal at the top of a market. Stochastics are considered overbought. Looks like we're getting close to, if not a crossover sell signal. This is a time to pick up some of those put options, establish a floor, leave the top side open. There is so much going on in the cattle complex between world screwworm, tariffs, good demand, but we're kind of past the grilling peak. Lots of arguments. I think you just got to be a very good marketer. Uh, Take your time and talk to someone who really understands this and how they can help you implement.
I was glad you said that because you really got to be careful with this trade as it ever changes. And we know obviously the livelihood that's tied to it, which means there's got to be some emotion that kind of steps in as well as they look at those numbers on the screen.
They do, and emotions real. It's strong. Prices are high, and with high prices there's everything's relative to something. So I've talked to a number of producers, and we kind of quote some puts, and they kind of gulp a little bit, and oof, that's a lot of money. Yet I'm also talking to producers who have contracted cattle, and they're seeing a market that's trading 25, $30 higher than they contracted, and that's hard to gulp too. uh, because as one of my producers said, he said, I know I'm being judged by neighbors and family that, boy, we're making all this money, which we are doing okay, but we're not doing great because we locked in. So that's why I mentioned or led with the put strategy, that you're buying insurance, let's call it futures insurance, that's very flexible. You're not married to it, but it does put a flooring mechanism in place.
Did it come as a surprise to you that the border closed once again with
Yes.
Mexico?
Yeah,
It
I'll be
did.
blunt.
Okay.
Yes.
Okay.
Yeah, yeah, well, it just opened, and, the market seemed to like that a lot, and it didn't
Hmm.
like today. So, I don't wanna profess that I have this screwworm understanding, like, I'm a professional at it, but, I'll respect the USDA's decision, understanding that maybe this is short-lived, maybe not, we don't know. But it was disappointing for the Mexican producer. It's disappointing for the U.S. buyer. It drives our prices higher. They've got cattle overload. You and I chatted a little bit. Maybe it's good for corn demand, and maybe that helps U.S. corn producers. But it's a very volatile window, and to try and outguess this kind of market news is challenging. So concentration should be strategic in approach rather than maybe trying to speculate and outguess.
Well, most importantly, obviously, it comes down to protecting the U.S. cattle herd here. So, as frustrating as it may be for many, you got to kind of look at that side of the picture of it as well.
Well, you do. It's not only protecting the herd, but perception is often everything.
Yeah.
Markets move, I say, on perception, momentum, and attitude. And the consumer, if they get the perception that there could be something wrong with beef in the U.S. or beef coming into the U.S., That could be a very ugly event for U.S. cattle prices if the consumer just backs away and says, we like chicken and pork better now.
So then let me ask you this. Did the 50% tariff on Brazil come as a surprise?
Yes and no. It's been in the works. There's rumors, there's talks, and it's a very interesting environment right now. But I think, yeah, I guess if it's let's go on a 1 to 10 scale, and
Mhm.
total surprise is a 10. I think maybe a 6 for me. I wasn't
Okay.
really, jumping through hoops to expect it to happen, but it did. But there's been so much activity in this administration and attempts to really get people to the table that it doesn't surprise me. It wouldn't surprise me if in a short window of time this whole tariff with Brazil is pushed back or reduced again. So stay tuned, I guess, is the if there's one thing that's probably been consistent is that nothing's been consistent, which means it's
Mm.
a lot of let's say these are old terms, shucking and jiving for position. I might show my age there, but certainly, certainly a little surprising. Yeah.
You kind of feel like a beach ball underwater, not knowing which direction these tariffs are going to go,
Good
knowing
analogy.
that August 1st now is the new day versus yesterday. And it just kind of adds a little bit of a market pressure for folks.
It does. So there's a lot of what I call music. There's a lot of activity, and we can try and for what it's worth, if somebody said, "Well, how does your day look?" What I end up doing is I come into work each day and I make a ledger sheet, the bull, the bear, put them together, try and put some weight to them, and then as things develop during the day, let's say a cash market develops in cattle, then we can start moving things to one side of that ledger or another, just to get a good feel. I'm a big believer that what's get written down gets done, and it's very visible, and you can see it, and you're consistent with it. There is just a lot, and let's call it music. There's a lot of music in this in the cattle, the complex, not only because of long-term tight inventory supply and just at what point does the consumer just say we just can't afford this anymore,
Mhm.
but also what is the cow calf operator doing? Are they holding heifers back? Are they holding calves back? Or are they saying, this money is too good. I need to just keep the cash flow going right now this year. I'll worry about expanding next year. So there's a lot of activity that's uh, happening. The market's looking at it. When I say the market, all the participants, the centralized auction is the exchange, and that's where buyers and sellers come together.
So what do you think, since we're still talking livestock, what do you think the mode of action is going to be for this cattle complex as we move through the summer months? We're already past the peak grilling, wondering where demand's going to be. What are your thoughts headed towards fall?
My thoughts headed towards fall is that the marketplace is probably inclined to see lower demand. And when demand is diminished, you're going to see the market probably begin a slow turnover and a downtrend will establish. I think that's the greatest likelihood. There's always what I'm going to call legs. So there's this push higher right now, and then there's a leg period where demand begins to diminish. It takes a while for price. So if somebody put my feet to the fire, I would say the cattle market is peaking here in the summer of 2025, or maybe in early fall. But I think after that, it's going to get more and more challenging. Keep in mind things like this too. The dairy herd isn't going to likely contract. It's likely to maintain or grow, anticipating that the beef calf is such a strong component to the dairy revenue stream. So there's going to be some activity that suggests more supply down the road. What's not going to happen is I don't think we're going to see any cattle on feed or inventory reports that all of a sudden shockingly find all these inventory numbers or cattle. I don't think that's in the cards and may never be in the cards in the next 5, 6, 7 years. It's an industry that's got itself sort of backed into a corner and found that the consumer is willing to pay more. And that consumer isn't every consumer, but it's a select group of consumers that whether they pay $20 for a steak or 26, it doesn't matter. They're going to have a steak.
And you don't think they're going to start switching when they're looking at their budgets and switch to pork or chicken?
I think the shopper will. I'm guess I'm talking about the restaurant crowd.
Okay.
I don't think the restaurant crowd is going to shift. They go out, they want to eat, they want to have a good time. I don't think that crowd's going to shift much. The retail crowd may have already shifted. I've tried to do my own sort of look and watch in some of the bigger box stores how consumers they go up to the
Mhm.
everybody's probably they look, pick something up, look at it, kind of look at it, look over here, put it down, go over here, and walk out with some pork or some chicken. Um, so I think that that sector is already maybe well entrenched into not buying as much beef. And I think the industry too has figured out how to use portion sizes and skim down on portions and servings. So that's something that's probably happened as well. But I think we're just getting to a point where both of those are maximizing. So you get demand from one sector, but I've argued this for the last year. I just don't see how we expect to grow demand at higher prices. That just doesn't seem to bode well for an economic model.
So as we wrap up this side of the conversation and switch to what we're seeing on the grain side, I wanted to bring up something that you brought up that you and I were just talking about, and that was the exports and the opportunity for corn with Mexico. I mean, they were the biggest buyer last week, no surprise. But overall, as you look at the grain exports, what are your thoughts from this week?
Yeah, another stellar week of corn export
Yeah.
sales are my thoughts. It was just outstanding. I think it was 85 million bushels between old and new crop. So that's just really outstanding. And the old crop has exceeded the USDA estimate year to date. So when you look at the upcoming USDA report, uh, we're exceeding what the USDA has forecasted. So there's likely to be a change there that'll lower carry in for or they'll lower carry out for this year. That'll lower carry in for next year, starting September 1st. So it tightens up the big picture perspective. I think the whole problem with the corn market has been just one continuous good forecast after another, heavy fund selling, and it's a good looking crop. We can't dismiss that. At the same time, we're seeing private estimates continue to add that safrinha corn crop larger. So you got two crops that are increasing in size. Countering that is a cheaper dollar and good export sales. But the overriding defensiveness of the marketplace is that the managed money continues to add to short positions. It's a great crop at this point. It's not, I said for a long time, it's a good crop. I think it's turning to a great crop. Crop ratings have increased from 68% good to excellent, then to 70 to 73 to 74. That's an improving crop at a time window when the forecast looks for most of the Midwest 6 to 10 days as either normal or below normal in temperatures, and all of the Midwest above normal in precipitation. You can't get a better pollination forecast.
I don't wanna jinx it because, I mean, we're sitting you and I, the 10th of July. We know we gotta get through August yet, but you look at the EU and the GFS models. I mean, Illinois, Indiana could get up to 5 inches this next
Mm,
week.
yeah.
More rain hitting, the Dakotas, Iowa, South Dakota, or Nebraska. So, I mean, really, Mother Nature's being pretty kind, Brian.
Well, very kind. And if you're in northern Illinois, you need rain. It's dry, and there
Right.
are plenty who are struggling that have gotten spits here and spits there, or not much. And the bigger consequence of all of that is that the market continues to look at the net of it, and it's still an improving crop condition. So those rains are really needed, and if they do hit, that's going to help to push that crop further along. So I don't see the end user with the forecast the way it is weighing these good export sales against the weather and saying, "Well, I really need to buy today. I know it's cheap." I just don't see that.
In this last week, we saw some nice soybean unknown destinations. Everybody kind of assumes that it's possibly going to be China, and we won't know that until, the cargo's lined up for it. But what are your thoughts? Do you think China or other countries are kind of going around the horn per se and buying through somebody else?
Uh, they could be. The U.S. has good product at a reasonable price, and China may be working through different channels. I think China wants to make sure that they have an adequate supply, and maybe just because of the way tensions are right now, or the lack of deal yet, they don't want to buy from the U.S. or at least announce it. I'm not so sure. I'm a big believer that these tariffs are going to very specifically uh, let's say, derail exports. What's derailing exports in some areas is just too much supply. There's this China has stockpiles of inventory. They don't need to buy corn. They had expectations are for a record corn crop. Big picture perspective, though, if you look at the world, though, low prices are really developing demand. And we talked about corn with this forecast could be on its, heading toward its home stretch. The bean crop ratings have not improved in 4 weeks. Exactly the same, 66% good to excellent.
Yeah.
So when you look at that and look at the importance of August weather, late July, August weather, I know I'm sounding like I'm putting a nail in the coffin here a few minutes ago, but the weather for beans is much more critical. The carryout for beans, I think, is much more sensitive than the corn carryout, despite the good export sales today. When you look at 295 million bushels, and your most critical weather is really end of July, August, there's no room for error in soybean production. So unless the privates start to forecast a higher yield, there is vulnerability to the yield if the weather doesn't cooperate. So I think beans are, a commodity that probably, if I had to rate potential right now, really have the greatest potential to go somewhere and go somewhere fast to the upside if August weather isn't conducive.
How short is South America on bin space? I did some reading yesterday that was talking about, they haven't even, I mean, they're into the safrinha corn crop, but they might not have a place to put it all.
Right. So you hear these things. The answer is I don't know how short they are
Right.
on storage, and I guess I could look at some government numbers or what they think that they have. But when you have record crops, there needs to be a home for it, or you're not going to take it off the field. So one of the issues that we're hearing and seeing is some of these fields that may be ready to go, but there's nowhere to go with it for right now. That is a problem you have when you have such a high yielding big crop and some logistical issues. Now, to give credit to the Southern Hemisphere, in particular Brazil, they have for 20 years now really invested strongly into infrastructure, a lot of that money coming from China. But it is one of those variables out there that nobody's really talking about, that if there's a certain percent of the crop left in the field and they run into a rainy stretch, what does that look like for quality? What does it look like for logistics? What does it look like for getting that corn harvested? Certainly a good question. I just don't have a good answer on the actual storage capacity.
Do we expect any surprises in WASDE tomorrow?
No, I don't think
Okay.
so. I think the crop ratings, the rain, um, they I don't know if they're in a position to really raise corn yield yet. That might be in the next report if these conditions continue to stay where they're at or improve. Uh, it's possible they might lower the bean number, maybe a half a bushel in yield, but I doubt it. I think they'll kick that can down the road a little bit. Um, the demand side is interesting on corn. It'll be interesting to see if they in fact do something to raise the yield in corn. Um, I'm sorry, raise the exports in corn, probably leave yield unchanged. That could make for an interesting stocks to usage number. However, Susan, we're at a time of the year where the market's going to start looking beyond that and just look at what's coming. And what's coming is a whale of a crop if these conditions continue.
Lots of great things that we looked at today, Brian. Parting thoughts, anything we should watch out for besides what we talked about today, going into tomorrow and into next week?
Yeah, so a couple of things. One, if I'm an end user and buy corn, I wouldn't get or beans, I wouldn't get just overly confident that things are not going to move. Things come along that we can't see or perceive. Take a good hard look at the value and make sure that you're very strategic in your feed buying or shifting your risk. There may not be as much urgency today as there was maybe 3 weeks or a month ago, now that we're headed toward, let's say, the mid part of July. But prices are a really good value. And you take a basis off corn, it just doesn't work well for producers, but it works well for every end user. So, my first message would be to end users, don't get too comfortable. Look at strategy, talk to your advisor, talk to your vendors. The second thing is for producers of corn and soybeans, keep in mind there's some big crops inching forward here, and there's still downside risk. So if you're light on sales, I would suggest talk to again your advisor or somebody who's knowledgeable in ways that you could shift that risk, in particular deferred months that have some carry built in. One scenario is the crop just keeps moving along and prices continue to sag and we see threes in front of corn.
All right. Thanks so much. Bryan Doherty joining us today as we ramp up another edition of Market Talk. Great stuff.
Well, thank you. Appreciate it.